a sense of capital.
Hey, aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Insights Time. Your host, Insights Time? What the fuck? Live earnings, or the former Crunch Time, how I called it. I love this title. Your host of today is Drew, and I'm very glad to have you in. The performance is laggy a bit. Not sure what is the reason actually, but I will try to keep the stream today a little bit shorter. You can see I'm not at home. I'm on a business trip in Copenhagen, beautiful city. Somehow my hardware is a mess. Really no clue, man. I mean, I did live streams with the same setup in Austria, in the Netherlands, and Germany. I'm not sure if even further countries, but however, now it's fighting. I'm not sure. It's definitely struggling. Guys, I need to be a little bit, how we call this, not that loud, because both someone is living and I'm booked just an accommodation on a low budget level. It is how it is, guys. Stock market prices dropping, you know. I need to take care of my budget, of my wallet. So, however, the company we'll talk today about is new and the Q3 2025 earnings. But before we jump in, quick disclaimer as always: no financial advice, no consultation whatsoever. There's no guarantee for correctness of the provided data. Make your own research, your own due diligence process, because at the end it's your own money and you need to live with your decision, not me actually. Okay guys, so the company we're talking today about is new, the digital bank, digital and financial service out of Latin America, headquartered in Brazil, but active as well in Mexico, and rolling out in the business currently in the third market, which is Colombia. You can see, I mean, classic digital banking services, like loans, bank accounts, credit business, of course, but as well purchasing crypto, for instance, getting insurances for your smartphone. All of this is, and Newsell, for instance, so even SIM cards for your smartphone, for your mobile phone. All of this is combined in new, a big player in this region actually. And the results are already live, as you can see here and here. And so I don't want to waste any time. And guys, I'm not sure as well what is going on with the light action, why it's blinking and flashing and whatsoever. I assume it's definitely difficult to follow me. I'm very sorry for this, but again, I will just push through it right now. So let's begin. As always, I've prepared an Excel sheet, as you can see here, and already filled the data and further data, not that much actually in case of new, so we are quickly through it. Into this table, and let's start with the top and bottom line growth. You can see here top line growth. I mean, the forecast, the guidance was roughly 3.3 billion US dollars. My expectation was roughly 3.8 billion US dollars, because I wanted to see. You can see 1 year ago from Q2 to Q3. They developed by 90 million US dollars, so not that much, but however, this 90 million I wanted to see, so 3.7 billion plus 90 million was 3.8 billion roughly. But guys, what's going on here? I mean, last quarter was already crazy beat in terms of revenue, and guys, I'm invested into this stock, into this company, primarily because of the revenue growth at the end right now. I want to see revenue growth. I know profit growth will come sooner or later, as soon as they want to achieve it. But so far for them and for me as well, revenue is definitely in the spotlight. And yes, a forecast beat by 900 million, or you can see a year-on-year growth of roughly 42%. It's crazy. I mean, for me, new is a safe bet as long as macroeconomical parameters, let's say the environment where new is active in terms of economy and politics, is stable. You never know what is going on there in Latin America. But however, as long as it's stable, I have no doubt or not big concerns that new is developing great. And yeah, that is the big proof. I mean, that might be after HIMS high times, let's say it like this. If you followed me through them 1 year ago whatsoever, when really HIMS was peaking through weight loss or by weight loss products, medicaments, this might be the second strongest revenue result and really achievement, you can tell it, what I've witnessed so far. Yeah, so that's crazy impressive for me. Very, very green, very, very full green, guys. And in terms of earnings per share, it doesn't look that convincing. I mean, forecast was 16 US dollar cents. I wanted to 17 US dollar cents just because to see a small beat. But look, I mean, when we check out the history of their results, of new results, you can see, I mean, in terms of revenue, they're very solid, basically. But in terms of, I'm not sure if that's correct, actually, guys. Let me check this out. No. That's for sure not correct. Is this new? 3.16? Yeah, I'm not sure about if this is correct, actually, guys. 3.13. Really not sure. However, this time you can see here the results are not updated right now, up to date. But you can see what I want to show you is they have acquired a lot of misses in terms of earnings per share, but a lot of beats in terms of revenue. So again, revenue, profit is not in that hard focus for them, and revenue is definitely more essential. Again, same like me as an investor. And so yeah, I would love to see a beat at the end, but if they're not providing it right now, I'm quite confident they will provide it in the future. So now they just covered the expectations with 16 US dollar cents. So this is, for me, because I'm very, very tough here. It's very tough, yeah, and very, very strict. But it's a miss for me, because I want to really see this 17 US dollar cents. I need to be strict here. But honestly, guys, because of this crazy, I mean, you can see it's still 46% year-on-year growth, but this 42% revenue growth is crazy. This is the fundament for, in my opinion, the fundament for future profitability, for a lot of range, a lot of potential, and therefore, in this case, even if we would just by distance watch on it and check out what would be the evaluation, the rating, you would say, okay, neutral, yellow rating, but in this case it's a green one, because this is okay for me. Earnings per share is not in the focus. It's not a big miss or whatsoever. Still, I don't think it's positive, but revenue is crazy positive from my perspective. Crazy. You always think really like it's accelerating, companies accelerating, reaching new heights. You always think, where's the top? And still far away, very likely, guys. So far, so good, I would say. Now let's check out and dig a little bit deeper into the company-specific details. And herefore we check out what is going on with the net income margin. And as you know, I always compare year-on-year growth this quarter, so Q3 2025 to Q3 2024, with the development of past quarter year-on-year. So Q2 2025 to Q2 2024, to remove a bit the seasonality, if there are seasonal effects, which are for most of the business existing. And you can see here 19%. It's not the largest, not the highest one, because 1 year again, you can see it was very profitable. Likely there is a seasonality with 19%. However, it is strong. It's a bit lower. It's a bit lower than 1 year. So past quarter it grew by 0.3%. Now it's dropped by 0.1%. It's not really a big drop, and it's not really a big growth last quarter. So for me, from my perspective, you can say what it should develop always in the positive, but it's really the net income margin. You know, it has a certain ceiling, especially when you are in the growth stage and very competitive. Yeah, so it's not positive for me. Positive would be 20%, but definitely a solid neutral rating from my perspective. I think 19% is good ground to sail as a bank institute. Now we have here the annual return on assets. The RE, what the fuck assets? And you can see here as well, this actually is a bit different because here we're talking about an all-time high. Yeah, so past quarter 0% growth, and this quarter year on year 1% growth. That's amazing to see, the best one again in the past 2 years, and I assume in the company history, which is very reasonable, and therefore, yeah, definitely leave a positive sign here. So far when we talk about profitability, neutral to positive, looks quite solid. Now we're checking out more or less, for me, almost the most important, or one of the most important drivers and parameters when we want to screen the results of new bank and new holdings, which is the customer base and how it is developing. You know, Brazil is the legacy, the game, the primary market. Mexico is the rising star with a lot of potential. Many investors hope that Mexico will step into the large footsteps, honestly, from Brazil. And Colombia is really like, it is there. I think it's great that there's a sign that, or they show, okay, they're not basically laying all their hopes and diversifying everything on 2 countries, but at least 3 and maybe, who knows, 4. We know that they just try to get the permission for the U.S. banking business, maybe for the Hispanics over there. I mean, that's the reason why this video is called Born in the U.S.A. If you know who I mean, who sing this a bit better in the past. Yeah, however, let's step in and check out what is going on with Brazil. And I mean, again, you need to know that there is a certain ceiling. They already cover a large chunk of Brazil adult population as potential and existing banking customers, and obviously it's getting lower, the growth. You can see past quarter year-on-year growth was 12%, now 11.3%. That's completely fine for me. Yeah, I would a little bit be concerned if it would drop to 7%, something like this, or 8%. If it's really dropping heavily and quickly, then I would think, okay, what is going on? But even then, they have a so solid customer base. Obviously, that's an all-time high. Another 3 more million customers compared to the past quarter. I mean, compare this to other banks, even like digital banks, like SoFi, for instance, in the U.S. Just 3 million in their home market, where they already have 107 million from quarter to quarter. Crazy. And that is, of course, the fundament for new, satisfied and loyal customers. Yeah, so that's for me for sure green. Because again, as long as it's not dropping, I'm happy about any growth in Brazil, actually, especially when it's not dropping that heavily. Now let's take a look at the customers in Mexico. Here, it's way more important that it's still growing very strongly. And you can see past quarter year-on-year growth was 54%. Now it's 46%. So that's actually a way more heavy drop, but might be a case because it's a year-on-year perspective that Q2 and compared to Q3 2024. So the ratio KPI, the number which today's result gets compared with, was already very different. And I mean, you can see here Q1 to Q2. Can you see it? Yes, looks good. It was 120,000 more, and then we had here a jump of 110,000. So, and again 110,000. So it was not because of a big jump from Q2 to Q3. That's not the case. So simply the growth is a bit stagnating. You can see, I mean, it's at least on the relative scale. On the absolute scale, you can see it's always 1 million. Since the past 4 quarters, 1 million, 1 million, 1 million, 1 million. Is that okay? Maybe it is. Maybe for some, and maybe I'm quite sure in the earnings call they will add some color to this topic, because I assume analysts will ask questions in this direction in terms of, okay, what is going on with Mexico? Is it somehow proactively, with a kind of level of awareness, done that Mexico is not growing heavily and accelerating on the absolute scale, like now 1.1 million more customers and next quarter 1.2 million more customers? Why it's on a solid scale? Why is that the case? I think that is not what you like to see when you think about Mexico as the successor of Brazil as the new large market. And so therefore I'm very strict here. That is for me a bit disappointing. For sure, that's negative for me. Not a bit disappointing. I don't like to see this actually. I'm very glad about revenue and this kind of stuff, and that Brazil is still developing that great. But seeing Mexico developing just on this, I mean, how much population you can see? They're still at 128 million, and they covered now 10%. How long it should take till they cover this 50% like they achieved it with Brazil? Like each year 4 million more. I assume it's a bit low actually. It's a bit low like this. And it will take whatever 10 years, and they are on the same coverage ratio like in Brazil, like roughly 50%. So that's too low for me actually. So that makes it simple. Colombia, numbers, to find the numbers was a bit difficult. I think they just shared numbers of Brazil, Mexico on total numbers, so I deducted it and had 4 million, and then I'm a little bit confused because they already had past quarter 4 million, and before actually, I mean, it developed quite nice from Q1 to Q2 with 1 million more. That was from the absolute scale very, very strong, by far the strongest result in the past quarters. Yes, it's still 100% growth year on year, but again, no growth to past quarter. Not sure what is going on. It sounds really awkward. I mean, take care. Maybe you do your own research later on and double check what is going on with this Colombian customer number. But in this case, very simple negative. So a little bit unfortunate, but however. But let's check out what is going on with the customer volume in total. And we can see it here. I mean, past quarter 76% year-on-year growth, now 15.8. So let's say 18% past quarter, now 16%, 2% down. Could be a bit lower, I think, the drop, but it is okay. It is okay. However, when you compare it to past quarters, you can see a lot of times it was more. Now it's just 4 million more, yes, and 4 million more is, it is the lowest actually. It's the lowest. 109, 214. Okay, even here it was a bit higher, even Q4. Again lower. Yeah, it's the lowest one in the past 2 years. So however, then it's simple for me. I rate it negative. I mean, obviously, if when Colombia is not adding any value to it, and Mexico is somehow steady and not accelerating, then it's just reasonable, I think. Okay. So, however, when you check out the coverage of the population with 51%, 10%, 7.7% or 8%, Brazil, no doubt, is crazy. I mean, it's overall citizens. It's not just adults. It's crazy. But Mexico and Colombia, a lot of room for potential. It's good at the end. It's good that this potential is existing. I would be very sad if they already would cover 100% and would achieve the same revenue level. So better like this. But on the other hand, yeah, we want to see that they dig this potential and really convert it into revenue and profits. Yeah. Okay, guys. Now we check out what is going on with a little bit more banking specific numbers, new specific numbers, and that is the activity rate. So basically how active the customers are. And you can see it's 83%. It was already roughly 83%. Yes, it was already more. However, 80% is crazy high. I mean, not without any reason. If you check the satisfaction levels, different KPIs are existing there, indicators about customers of all kinds of industries and businesses, how satisfied they are, how loyal they are, how repetitive they doing their purchases or whatsoever at these businesses. You can check out that the customer satisfaction level of new is crazy good, very good, very solid. And so 83% is the result out of it. Customers are happy, they stay active at this bank, they're using it, they're utilizing the solutions, the still growing and broader getting product portfolio and service portfolio of new. So that's solid for me. So now we have a really hot number. I mean, the number maybe in the whole smaller or more detailed look of new, because that is the average revenue per active customer. So before we had 83% are active customers, and now the question, how much revenue they accomplishing through new in the past quarter, in the past 3 months. And you can see a strong one, really strong, all-time high. And I mean, there's so much room for improvement if you compare it to other more traditional banks. They have something like 20, 30 or even more US dollars per quarter. So a lot of potential here, which results in a lot of profit on a certain point in time, But so far, however, amazing, and this jump is very strong. Last quarter was already very strong, the jump. Before it wasn't that strong, it was a little bit more constant located. However, now it's very positive, like last quarter, so another positive result, and that is nice to see that they're doing this. I mean, it can be the case that they increase their conditions, their fees, let's say it like this, but on the other hand, increase their products, so doing upselling and cross-selling in terms of their banking products and services. And yeah, it seems like customers liking it. Yeah. So more customers, but even more revenue per customer. That's great. And now we take a look on the cost side and expenditure side. So cost to serve for the past 3 quarters, 3 months per customer. And we can see here that actually increased as well a bit. Yeah, that's a bit unfortunate. I would love to see it is stable. However, as long as it's below $1, I'm very happy. Yeah, I mean, there's a certain rule of scale. Yes, it can cost more on a certain level to serve a customer, but on the other hand, running a banking business for 1,000 customers is way more expensive per customer than running a banking business for 5 million customers. Should be at least like this. Yeah, so this economy of scale is existing actually, and here it's unfortunately heading into the wrong direction, because you can see it's the highest one this year, and on the top level for the past 2 years. Yeah, I say it's negative. It's actually it's hard to say, man. 90 cents. Let's say neutral, because 90 US dollar cents is crazy low. I mean, yes, they have no stores. Yeah, so they save a lot of money. Very likely they will not have ATMs, for instance. So all of this saving in terms of the infrastructure, like hardware and stores and this kind of stuff, that definitely supports here. I don't like that it's higher than before, but on the other hand, it is crazy low, and that's okay that it's still below $1. It's crazy low. Even $1, even a bit more. I mean, compare it, revenue per customer is $13 in cost below $1. Yeah, that's a crispy business. Now let's check out what's going on with the net interest margin, which is definitely a quite crucial number in the banking business. And we can see it is actually the lowest one in the past 2 years. Not sure why that's the case. I'm quite sure here they will add some information as well in the earnings call. But yeah, that's straight negative. Lowest one in the past 2 years, that is not nice to see. And who knows what is behind this, but we want to see it stable or at least, or raising, of course. Now we check out what is going on with the default rate, so basically the non-performing loans. So basically here, the repayment is overdue for 15 till 90 days by the banking customer, and here it's more than 90 days. So let's say if the repayment is overdue for 90 days till 90 days, the chances are still very high that they get the money back. Yeah? But when it's more than 90 days, it's a little bit more unlikely they receive it back. Yeah, so these 15 to 90 days guys who not do the repayment will transfer to this 90 days plus guys, and then the chances getting lower and lower. They're getting their money back, and of course we want to have here percentage numbers which are getting lower or lower whatsoever. The higher they are, the higher is the risk that they're losing and missing money. Yeah, and likely they are too risky in terms of granting loans and borrow monies to others, give monies to others. So yeah, we can see the 15 to 19 days NPL is actually, so non-performing loans, is actually quite low, lower than the past quarter. That's great. So a green one, a positive rating, but the overdue repayment for more than 90 days is quite high, almost one of the highest one in the past 2 years, increasing, not nice. Part of the game maybe, yeah, it's always the question what is behind it, yeah, and do they have good insights, good overview, good transparency about if is it still cheap or not, or is it still manageable, not cheap, manageable, the risk. I assume they know what they are doing, so I keep it neutral, but again, 90 plus days NPL, not performing loans, not that great. Now let's take a look on the shareholder orientation, how much they cherish, they value us as shareholders, and we want to see that the stock-based compensation share of revenue is of course low. I mean, yes, a certain level is okay, and compensating the stuff by shares is very regular. It's not like their invention whatsoever. I mean, I think Centon One has something like 30%, 30. So I mean, that's very, very high. But yeah, here we have 2.1%, and that's actually crazy low compared to the past quarters. It's the lowest one in the past 2 years. I mean, roughly 1% lower year on year, more or less the same like last quarter. But the absolute number is as well the lowest, and that's great. That's great to see. Yeah, I mean, obviously the business is profitable. I mean, we're talking here about net income of $780 million US. Yeah, so high margins, high returns. Obviously, they are not retaining or based on or highly impacted on stock-based compensations for their stuff. Yeah, but great to see. So what we do with all these numbers? I mean, when we talk about these details, we have here something like neutral, I would say. Yeah, customer base is definitely more heavy. Yeah, but that is neutral to positive, and that is negative. Let's say it's neutral, a little bit more red than neutral. Then we have here the different banking specific numbers. Wait, I go a little bit to the right. So, and yeah, that means that is overall neutral, very clear as well. So we are neutral, neutral, neutral. Then we have here the non-performing loans, the default rates I talked about a moment ago, which is neutral as well. And then we have another positive stock-based compensation share, and that's straight positive, yeah. However, not that essential actually. Yeah, those other KPIs for me at least are way more crucial, way more valuable, and yeah. So, however, it's very neutral picture. Yes, it's a blend. There's a lot of red, a lot of negative aspects, a lot of positive aspects, and a few neutral ones. But overall, I think it's quite clear that it's neutral. And then we go to the top and bottom line growth, and again, top line growth was crazy. Revenue was crazy, in my perspective. Really, I mean, I'm now investing into this company for 2.5 years, and that was the most solid one so far, I assume. This development, very impressive. And yeah, earnings per share negative, but actually it's okay. I told you I see this as positive. So we have here neutral, and we have here this positive with a neutral touch. It's very difficult because at the end, again, I rate revenue growth at this company very, very strongly. It's very, very essential. On the other hand, the customer base that is developing and heading into the right direction is for me as well very, very essential. Yeah, second or both on the same level. Let's say like this. I mean that displays the future of the business, the potential. Yeah, and yeah, therefore, I mean, because of the strong revenue, I almost have this tendency to grant them a positive rating, but because of especially customer base is developing a little bit awkward in Mexico and Colombia, that definitely throws some shadow on the revenue growth. And then overall, I think we land on a very solid, neutral verdict for this company, yeah, which is absolutely okay. I mean, I'm only investing for me the best companies, which are 4 companies, and when they achieve a neutral rating, a yellow rating, then it's for me is like it's okay. I'm still into this thesis, and I would still invest. I regret nothing. I would repeat my investment decision, and so therefore achieving a neutral rating is very, very solid for new. Yeah, and yeah, I already checked the results. I saw them on the site at the end, right after earnings release, let's say roughly a half an hour ago, 40 minutes ago, and I think it was 1-2% up. Yeah, based on my experience, it's very regular that new, same like Rep, for instance, both companies, even if they provide solid results, most of the time after market, after the closing bell has ringed, and even on the next day, a lot of times they are dropping. But I can imagine that in this case, because they are not really like strong red flags in my perspective, but on the other hand, revenue is very, very strong. And if the market can live with the customer base, and there are not other aspects I'm not considering right now, but I assume everything is fine actually, I think it's still, it goes up a bit. Even though the overall market, as you know, dropped today very heavily because of this AI correction, and okay, U.S. shutdown is solved now as far as I know, but yeah, this AI bubble, how some people call it, released a little bit air, which is good, I think, if that's the case. It's always good to release a bit air slowly out of a balloon than just popping it and getting out all the air from one moment to the other. Yeah, so that is my assumption how the price looks. Let's see what's going on with the price. Slight plus 0.7%. That's not a lot, but that's okay nowadays market. Many companies dropped heavily after announcing their earnings results, and so this one is okay. I'm happy with this. I mean, it developed already quite solid, as you can see here, in the past months, yeah, 1 year is not that great, as you can see, but year to date is already way more positive with 54%. Yeah, I mean, they had this currency problems, this kind of stuff was going on with the weakness, but their results look very, very good. Let's see what are the comments. The first market reactions here on Seeking Alpha, an investment platform which getting more and more expensive each year as a subscriber like me, but still I like it. And what we can see here in the market reactions, good numbers, great numbers, less awesome, punctuation, let's go, new holdings, limited, new, yeah, okay. So the audience is small so far, who reacted to the results, but seem to be satisfied, and I'm for sure satisfied as well. Yeah, I can imagine that this is a good fundament as soon as the markets recover a bit, the stock market, and this AI drop or whatever the reason for this is. I mean, there are always several drivers for this kind of stuff. I can assume that after this, new is reaccelerating really good, because now 4 billion US dollar revenue per quarter, and I think there is no getting back. So it's more accelerating, yeah. And I mean, this quarter 42% year-on-year growth. It's crazy in terms of revenue. Yeah, it's really impressive. Yeah, guys, that was already it. I mean, I kept it very compact. Yeah, I'm not sure if anyone is watching. Actually, nobody utilized the chat, and again, it looks like I'm streaming in the club, and it's a bit laggy and whatsoever, and I assume the voice is laggy as well. So if that's the case, sorry for disappointing you. Happens sometimes. Try my best, but at the end, it's for me fun. I don't want to make a living out of this. Yeah, that's not. I want to make money with stocks, not with you guys. Yeah, maybe that's a different approach than most of the people outside there who creating financial content. Yeah, I'm doing just this for fun. Yeah, so, and I need to do this anyhow as an investor. Say it like this, so that's okay for me. Yeah, but you can see here my current portfolio. Yes, I mean, now it's not only anymore valued on 182,000 US dollars, way lower, more like 155,000 or 160,000. Yeah, definitely lost something, but who cares? I mean, I didn't plan to sell something right now. It's all good. It's part of the game. However, what you can see here, Sentinel-1 is the last company I will take care of and back live the earnings of the cybersecurity company located in the US. It will take place on the 5th of December, so in roughly 3-4 weeks. Can't wait that you join if you are interested in a nice cybersecurity company which is quite cheap. Yeah, it's not unlikely I might invest a few dollars, a few euros tomorrow in it, because it's that cheap. Not that much, but yeah. I mean, you see here my low budget lifestyle. How should I invest that much money in this company? But yeah, maybe a few dollars will flow into this company. Yeah, because I'm still quite convinced, and I see the chance that it might surprise with the upcoming Q3 results. Yes, guys, and that's it for today. If you enjoyed what you have seen in the past moments, even if my English was not on point, yeah, I'm a bit exhausted from the trip, but still I like to stream actually. But my setup is very awkward. If you would see how this looks in here, I'm happy that I'm on air at the end. You know, that is all what counts for me. However, if you enjoyed it, feel free to like the stream, to subscribe to the channel. You can follow me as well on Instagram, A Sense of Capital. Always appreciate it, makes me happy. Spread some love. Yeah, that's good for you, good for me, good for everyone. Yeah, a little bit appreciation. And yeah, as always, at the end, like at the beginning, quick disclaimer: that was not financial advice, consultation, or whatsoever. and there was no correctness of the provided data, so check the numbers. I assume they have been correct, but I copy and paste them and whatsoever, and sometimes I'm just a human, I do mistakes, yeah? So make sure you check the numbers by yourself and make your own decision. And most important in life, as you know, staying healthy, taking care of your beloved ones, of your social environment, of your mental health as well. And I think that counts way more than money and the stock business, even when stock business can make a lot of fun and even sometimes some money, which then enhances the quality of life and the health. Yeah, so however, take care of yourself. Highly appreciate you joined, and see you next time. All the best. Cheers.
A sense of capital.